Okay, so I wanted to make this video just to kind of go over our trades and kind of what I see in the market here, um, just to kind of give you an idea of what my thought process is and what I'm looking at. This is the Nasdaq. Um, this is what I was referring to on Wednesday, where we were kind of coming up against the 200. The black is the 200, simple moving average. The 50 is the red is the 50, simple moving. The green is the 21 exponential, and then the 9 exponential is the pink one. Kind of um, faster medium, then long term. When we were coming up on the two, I mean, once we broke the 50 back in the beginning of January, I mean that we were done. I mean the market was just downhill. So that's why all this money was lost in January and everything was down because it's clear. I mean, once we get into this chop right here, back in November and December, the market hasn't hit a new high. We're basically going sideways. If you look at the weekly, you could tell it's like you know we're just going downhill. Once we broke the 50 here, it will be the 10 week on the weekly. So and then especially once we break the 200 here, I mean, nothing good happens here. We had a little rally, but again, this rally didn't even make it to the 200. We came down again, we rallied again, and then once I saw this, that's why we took profits here and we went short this day, and we made really really good profits here and then here, and then right around here is when I started going long again, getting rid of all my shorts, and we kept going lower. So the good thing is, let me clear this. What I'm looking at here is I'm seeing this uptrend here. Hopefully this will hold, and then we only go a little bit lower, but we still need to clear somewhere up here, which is a good way to go. The S&P again, relatively the S&P is looking a lot better. I mean we're kind of above the 200, but we broke it on Friday. Again, this little trend line here, if you kind of look at this way, it got broken. So we're kind of going downhill. We can kind of draw something like this, but I'm just anything below 200, nothing good happens. Again, same thing. Once we broke it here, it's been downhill. We need to kind of clear this level here for the 50 to be broken upwards. Um, when I was looking at the Qs, I have my trend lines there. We had this, huge uptrend the last year or so, and then somewhere around here in November last year, that's it. We couldn't make a new high, and we started going lower. This is a lower high. So now we train. So now we're trending this way, and then once we broke again the 50, it's downhill. We try to get to the 200. That's all I was saying on the Qs. That once we get the 200 here, on this day we hit it, and we poof, we came back down again. So this is what I'm seeing, this little wedge here. So this is holding. This right here is holding. So let's see on Monday we kind of hold that and kind of go a little bit higher, or if we break down, then all bets are off. Again, we need to kind of clear this area here on my trend lines alerts here. And again, the 50 down. It's just not a good market to be in. This is choppy. Look at this. I mean, you got a few down days and you update down. This is choppy. That's why I went more to a premium selling strategy, because once you have this whipsaw here, we can capture the up moves and the down moves with the volatility increasing and decreasing. Um, the SPY again holding up, again same trend line I have here. It's funny how just kind of like it came right to it and it kind of held it. So again, on the really really bad wick here, which is like all the way at the bottom, we open here and we close down here. So it's going to be hard to kind of like get back to it's going to take a while to kind of to resolve itself and kind of start going up again. But we'll play it as we see it. So I want to go over some of the trades that I put on and the reason behind it. Um, let's start with Tesla. This is where I had Tesla up here when it was kind of hitting um, its head on the 21 here, and it never really developed. I had the 1075 short here, once I saw that it kind of never broke this shelf here all these days here. So I sold 1075, and then on this day right here, I took profits, and I ended up taking profits here. Now, once I saw this, I'm looking at I love 792, so that's why I sold the 795. Somewhere, holding the 200. It's kind of held it throughout its life here. So my trade is it's gonna hold the 200. I have a 795 short. So let's see how it develops. If we break lower, then I'm just gonna keep on rolling, hopefully for a little pullback. If not, I'm just gonna take the loss and move on. I'm not gonna wait for this to go all the way down here. Um, Again, Tesla really, for it to be a trade to go long, it's got to break 1,000. It's just got to break 1,000. It's got to break about the 50 above the shelf here, and then eventually, with time, this line's going to continue to go lower. Eventually, that has to happen. We have to wait for this to happen. Nvidia, that's our other trade. And again, same kind of concept. I have this trend line here. It never even got to it, which is coinciding with the 50. We need to break here. Nvidia needs to break about 275 for it to be again a long play, and then it's got to break about 313, and then all-time highs up here. Again, my trade, it's kind of like I have the 220, 225s. It should be around the 200. My trade is that it's going to hold the 200 and bounce of it, or just kind of hover around there, let time pass to my 6 days that I have, and then it'll expire. If it breaks 200 and kind of keeps going lower, I gotta take my loss. I roll one of them, but the rest I just gotta take my loss. But that's kind of the trade. It has held a 200 all this time, and it held it even on these days, a little bit, but it kind of relatively held it. So that's kind of the trade on Nvidia. I also sold a short a 165 on Apple, which is somewhere around here. Again, it's Apple. I'm again for Apple to really do anything, it's got to break this right here. I'm kind of put an alert here. So when Apple kind of breaks this little shelf here, that's when I go long Apple. For right now, again, it's below the 50. It has held the 200. It held it here. It held it back here. It held it here. It definitely held it here. So that's a probability that's going to kind of hold this little area right here. So that's the trade on Apple. What else do we have? Meta, Facebook. On this day, I think it was on this day or this day, I sold up here the 290 short puts. That was a really, really good trade. We got a nice premium here. I mean, for Facebook to go all the way up here again to fill this gap, it's going to take a while. So we made a really, really good profit on these shorts here. And then I took out the rest here. And then today I sold down here the 200. Again, the low of the day, let me see, what's the low here is 216. So the low of the lowest it has ever gone is 216. So I had the 200. So I'm hoping it holds this low. If it doesn't hold this low, I still have a little cushion to 200. If it breaks 200, again, I might need to either roll it or just take partial losses, and I'll see what happens. But I mean, Facebook's got to go up so much to kind of just get right again. Again, it's below the 50, below the 200. They're rolling over. It's just not a good stock to be going long here. What else did we do? Okay, and then on the good ones we did a couple weeks ago. I mean, last week, PXD. I think I bought it somewhere around here when it broke this little shelf here, and then it kind of gave us a little bit of a scare. But overall, we made good money on this one. We made about 7 or 8 points on PXD. ARCH. Again, I think it was here when I bought it. Held it through a little bit, got a little bit of a relief rally here, and then it took some profits. That was a good trade, somewhere between, I think it was like 101 to like 111 or something like that. I think here when it started going down, that's when I started getting out of it, somewhere around there. EOG. That was another good trade, kind of somewhere when it, right here. I think when I broke this little shelf and then just kind of riding this, I think I sold somewhere around here and then took profits. Again, if you notice, these are all like top industry group, number 4 ranking right here. They're all oil and gas. PXD, oil and gas. ARCH, energy, number 2 group right here, number 2. So energy, oil, that's what's been leading the market. I mean, the previous, growth stocks, they're not doing anything. Again, we saw Nvidia, we saw Tesla, we saw Apple, I mean, Microsoft. Look at this, it's just not doing anything below the 50. It's holding the 200, but do you really see this stock just taking off? No, it's got to kind of build this little base here and then kind of clear this little resistance area here. What else have we had this last? Google, the Google trade I did. The butterfly I put on. Here's the beauty of this trade. It's a butterfly of 2600 put, 2550, and then down here for protection. So basically, Google, it's a 2684, somewhere around here. So I'm already in the money. So we paid I think it's like 350 for this. And I mean, the potential for the risk reward is incredible. So we have from 2600 to 2550. That's 50 points. So if Google just stays below, above 2600, that's a pretty decent trade. If it keeps going lower, then we kind of max it out at the 50-point range. So that's the Google. We have it's a short trade, basically. Again, it's in a range. It's not really doing anything. So that's the Google trade. What else do we do here? We have Amara. I saw some puts on Amara. That was just a crypto trade. Crypto's been kind of a little bit hot lately, so Mara's going to take advantage of that. So the low of Mara is 1943. I sold it 25. So I have a little bit of a cushion here. Again, Mara, I mean, this is the long bait. It hasn't really done anything for a while. It hit this high here and it's been downhill because crypto's been going downhill. But basically, it's a high volatile stock. I mean, it's got ridiculously increasing sales number. It has no earnings, but I mean, it's just like the projected earnings for next year is 48 cents and 421 in 2022. So a lot of growth potential in crypto. So it's just a little crypto trade, nothing to write home about. Maybe make $500 in a week, and that's about it. Not really doing anything crazy with this. And then the other trade was Netflix, which that one was a strangle. I basically sold the 500 and the 350. So I'm short the 500 and I'm short the 350. So as long as it stays within this range, in the next I think it's like 6 days, we'll be fine. Again, 351 is the low. It's kind of building a little shelf here. So this can go either way. Most likely it's going to keep going lower. But as long as it holds 350, we should be fine. Again, below the 50 moving average, below the 200. See this cross right here? When the 50-day moving average crosses the 200, that's called a death cross. That means that this is not going to go higher anytime soon. And then when the 50 crosses above the 200, like it did somewhere around here, that's called the golden cross, like right here. See, cross the 50 and the 200. That's called a golden cross. And normally prices go higher after that. So once you break the 50, you're done. That's what I'm saying. I never go long. Not never, but the probabilities of going long when the stock breaks the 50 or is below the 50 are extremely high. And look what happened here. It's going up, trending up. Breaks the 50 right here. What has it done since then? Nothing but go down. I mean, I can show you example after example. Look at Zoom. Great company. making a lot. I mean, look at this. Look at this sales growth: 191%, 54%, 35%. It's making money. Like great company, great company. But look at the stock. I mean, it went from 400 to 141. So it doesn't matter if it's a great company as long as if the stock's not performing. I mean, for me, it's got to break $404. I have this. I mean, I'm gonna just take this off. This. I mean, just for this to go to 400 again. I mean, my goodness, it's below a 200. It's below the 50. It's below a 20. It's hitting its head on a 21. I mean, this is just not conducive to any growth here. Again, same thing happened here. Once the 50 right here, death cross going down. But again, once it broke the 50 right here, this is when it broke the 50 right there. That it has never ever seen that price ever again. So whenever a stock breaks the 50-day moving average, get out. Get out. Don't come back in. I mean, look at Upstart. Great company. I mean, incredible growth. Look at this from like 150 to like 400. That's just, I mean, incredible. Yeah. But then broke the 50 on a gap down. It has never seen this price again. I mean, you don't want to hope. Oh yeah, it's Upstart. It's making. I mean, look at this ridiculous growth: 90%, 1,000%, 250% growth. The numbers are just amazing. The revenue growth, the earnings growth, but that doesn't matter. Boom. So it's not. It's not. I mean, don't fall in love with the company. Fall in love with the chart. Once it breaks the 50, get out. What's another story here? Teledoc, great company. I mean, great company. Look at these, like 159%, 81%. I mean, just a lot of growth in sales. But what has it done? It hasn't done anything. Once it broke the 50, somewhere back here somewhere. Um, what's working right now? Zim. I forgot to mention this one. Again, transportation shipping. Number 8 group. So you want to see that's why I filter. That's why I'm going to show you here. This is my scan. I filter by industry group right here. Industry group first. So the top stocks, the top industry, and then I cut it at the 50th. I don't go lower than like 50 or 60 right here. So that's why the best groups are the ones that are working. Look at Zim. I have my little alert here. Once it broke the 58, 59 range, the 60, I bought right here. I got stopped out once it broke here, but then once it broke it again, I bought right here at 62. It went to 70. Again, I wasn't in this one. I kind of took profits right here, and I got out. I didn't go for this little last 3 days because of the market. But again, leading industries, leading groups, they work. See, uptrending 50, uptrending 200. Let me show you another disaster. Hood, Robin Hood. I mean, you want to own this? I mean, it went as high as like 80 or something like that, something ridiculous on its IPO, and it has never seen that price again. 21, 8, the 50, because it was an IPO. So once the 50 started, it's never been above the 50. Why would you want to own this? Why would you want to own this? I mean, if you bought it at 40, and then just like this is just not trading is catching stocks that are going from up lower left to upper right. Once the 50 breaks, get out. That's it. You're done. Doesn't matter what the company is. Doesn't matter what it's doing. So this is the list that I sent you guys. This is what I do. I have, I don't know, like 30, 40 scans that I run. All these right here. Like all these are the, like the top scans of different criterias, proprietary stuff that I kind of put on there. I go through all these scans. I build a list on the scans, and then I put them all in the scans watch list, and that's what gives me the best of the best. And then once I have that, I rank by industry group first. Then second, I go to, I think composite rating. Yep, no, 52. That's right, 5205. So like most stocks, once they hit a 52-week high, again, let's look at Zim. Once they hit a high here, they kind of go through a little basing pattern, and then once they come up to this base again and break that high, they usually go higher. So I'm looking for stocks that are within 25% of the 52-week high. First, industry group. My main ranking is what's leading the market right now, what's working, best of the best, and then within those, who is closer to their highs, because higher highs make higher highs, lower lows make lower lows. Again, look at Zim. Look at this. Look at his earnings. Look at his sales. I mean, it's like ridiculous. Look at this. Look at this projected earnings and sales growth from like losing money to like, I mean, hence this. So you want to focus on this kind of stocks again above the 50. See, once it broke it here, once it broke it upwards here, it kind of never, and then just you want to focus on that. And then my third ranking is the relative strength in the last 3 months right here. So like, what's been leading the market. So what I look for, my scan, this is my scan. And when I look for bases. So again, good uptrend, and then it's kind of building a little base here. So my buy point will be above this high. The next one here, this is what I would do. My buy point will be above that high, trending higher. I don't want to buy stocks that are going down. I want stocks that are going high. I want to buy high and sell higher. I don't want to buy low and try to sell low, because if I buy low, it can go lower. I'm not a gambler. I'm trading here on probability. So when something's going, like look at this right here. Look at this high here, this high here. Once you broke this little base here, it took off. You make a few bucks here. Once it breaks it, you stop out, and then you do it again. Arch. This is one that we did, like I mentioned before. Once it breaks the 105 here, this little high here, you put this little base here. See, it's kind of base. Then once it breaks the base right here, you have a nice little profit. But you have to wait for that. This other one, again, these are all energy related. All the growth stocks are downhill because of the inflation rates and the CPI increase, the interest rates rate. Again, another one here, real nice little base here, nice little base here. Yeah. You buy here, and then if it doesn't work, you stop out. Simple as that. You buy it at 29.30, and you stop out at 28 something. Use a couple percentage point, 2-3% losses. That's perfectly fine. But then you keep it on your watch list. You put it on a little base. It kind of comes back in again here. It never really takes out the previous low. So you buy here again at 29.30, and you kind of ride it. Again, these are not sexy stocks because again, energy, oil. It's not like Tesla, Nvidia, Microsoft, Apple that has growth. That it's gonna move. But that's what's working right now. This market is just choppy. Again, this is what I look for. This little base right here, boom, takes off. So you want to look for this. You want to look for uptrending. Even here, right here, uptrend, nice little cup, and then once it breaks, that's it. You just write it, and then you get stopped out, and you take profits along the way. 69.28, it broke it here 73. You got a 3-point move, you get stopped out. Then you wait for it again. I mean, you gotta just keep at it. 73 to 84. So if you did it here, you made a little bit of money in this, and then you got stopped out. If you did it here, you might have taken a 1% loss or a break even. And then if you did it here, boom, you got a 14% gain. That's that's trading. You gotta keep at it. Again, good numbers. Look at this. They're expecting 13 and 37%. Energy coal. Another energy stock. Same thing here. I mean, this is kind of it's a lower price stock, but again, if it breaks 8, it should go. And if it doesn't, you get stopped out with a 1-2% loss. That's it. It's easy. This one here, see, it's building the base, but I wouldn't chase it here. It's just too parabolic. I mean, you could have bought it here in this little mini little lower base here, let's say at 27, and you could have done that, or just waiting for it to get up here to 36, 37, and then Should take off. This one I had it a few weeks ago. I think I bought it somewhere around here when it broke this little base here at 12, and I took it to like 14, and I got stopped out like at 13.80 or something like that. So I made a few bucks here. But again, this would have been the other base. Breaks 14, boom, you would have bought it right there. You get 3 points on a $14 stock. It's a pretty good move. You buy 200 shares, you get $600 in a couple of days. That's not bad. The other way you could do it is here. Once it breaks up here, or once it breaks this little area here, you buy it at 20, 21, and it should take off. And if not, you get stopped out right here. So I just want to give you I just want to kind of show you what I look for. See, like this one, I had a trend line here. This alert went off. So that would have been an entry. I didn't take it. I did not take this because, again, just the market is just so choppy. I'm kind of weary. But I mean, look at these numbers: 109% gain, 94% increase in sales, 245 in earnings. Look at this: 94 cents they're gonna earn after losing money, and then 544 in next year. Of course, it's gonna go up. I mean, once it breaks 20, I'm all over this. And then just write it again. My stop will be at 19 or something like that, below this little high here, maybe below this little high here. Take a 2%, 3% loss with a potential of 10, 15, 20, 30% gain. So that's kind of what I look for. I want to kind of give you an idea of our trades, what we have right now going on, the reasoning behind it, and then what I look for setups. There's nothing working. I mean, there's stuff working right now, but it's not, oil, energy. That's like this, it moves up, $1, $2. I mean, it's good money, here and there, but I'm looking for growth stocks, high momentum stocks. Until we get the Nasdaq above the 200, nothing's good gonna happen here. Nothing good. So I'm selling premium to capture the volatility. I'm reducing my exposure to like any longs. Right now, I am long. I'm delta long. I'm about 400 delta long right now because of the short puts. A short put is a long play, but I'm doing it through premium, so I have a cushion. So the stock could move, up and down as long as it doesn't hit like my strike. It can kind of do whatever it wants to do, but as long as it's here, time passes and I make money. The same thing on the upside, So that's kind of what we're doing right now. I'm gonna take those off if I see the market just continue to tank. I just take a small loss and move on and wait for a better scenario, a better setup on our stocks. I mean, the S&P's, it's just, again, below the 50. Once it breaks right here, this little trend line, then we start getting aggressive. Right now, it is not time to get aggressive. I mean, we're just not doing anything. So we gotta be patient, be disciplined, wait for our setups. I mean, it's a lot of chopping going on here. You don't want to be involved in this. So that's why I'm selling premium, keeping it tight. I'm about 70% cash. The premium is just holding a little bit of a margin. Again, taking a small little profit. I'm moving on. If they don't work, I'm getting out and just taking a small loss. I'd rather take a 3 or 4 or 5% loss than have a 10, 20, 15% loss and then have to climb my way back up again on my portfolio. Okay? So that's the strategy. Don't take big losses. That's what we have right now. Any questions, email me, text me. I'm here to help. All right, guys. I really, really hope this helped. Have a good weekend.